Oops, I was on mute. Good afternoon, everyone. Well, that's a rarity to say that on this channel, but I did muster up the motivation to do an afternoon weekend video on here. So in this one, I'm going to talk about a fund that we actually got into during the last video, the TSLY. And this one, so far, now that I've seen what the dividend pays, is really solid. So let's jump into it, because I'm sure those of you waiting for the live stream to start could see the thumbnail from the video showing 69%. And I'll explain exactly how that's possible. And to do that, we're going to go to Yahoo Finance, as we usually do. Let me just make sure this is sharing. So this fund is the Yield Max Tesla Option Income Strategy ETF. And so what you'll see here, because Yahoo Finance doesn't actually show on the front page of the fund what the dividend is. It actually doesn't show anything for the dividend. But if you go into historical data, dividends only, this is a very new fund. So it's only paid 3 months of dividends, because I believe this just started like less than 6 months ago. So the first dividend that it paid was almost an even dollar, January 10th. And then we had a 0.903 dividend payout February 8th. And then we had another 0.902 dividend paid out March 8th. So that's $2.80. So that's 3 months so far. So we're on pace for exactly the percentage I said, because this is 3 months out of a 12-month year. So to annualize this, we have to multiply this by 4. So annualized, the dividend is averaging on pace for $11.22 for the full year. So dividing $11.22 divided by the 16.17 that the fund closed that Friday would give us 69.4% in dividend payouts. So if that holds, this fund could be our new best friend. This could be our new favorite, because it's obviously way better than SVOL in this case. And it's cheaper, even though it's up in the after hours, meaning it's going to probably open up 5% higher tomorrow. And hopefully we have a better week for the market this week, because we kind of got hammered last week. But, well, all the futures are up so far, but the market's been up and down. So the futures might not be indicative of anything at this point. So this Yield Max Tesla Option Income Strategy ETF, this one, the first day's worth of data that we have is November 23rd. So let's see, December, January, February, March. So like 4 months. We've got like 4 months of history on this fund. Net asset value is actually showing up here on Yahoo Finance. So it's basically a perfectly fairly valued 16.16 in net asset value, 16.17 in what it's trading. So phenomenal. If I knew about this a week ago, I may have got into this instead of more SVOL. Expense ratio is a little high at almost a full percent, according to this. Year-to-date total return, however, because we opened the year at 1340, so we're up almost $3. So we're up 33% in this. So this is phenomenal. If you got this on January 3rd, on a lot of these, January 3rd was like the day to be buying stuff, because, well, the month of January was really good for the market. But the last 2 months, February and March, we've been down. It hasn't been so great. So, you know, if the whole year could be like January, and like I say, if we go all the way out between this year and next year, I don't think we're going to be down both of these years. We may still, who knows, we may be flat this year, but next year, like I say, it's an election year. I highly, highly doubt that they'll let the market be down in an election year. I just really doubt it. So, but yeah, from the start of the year, this looks really good. And 16.17 right now, compared to when it started trading, it was 21.76. So might be a great buying point for this one. And now we'll look at SVOL again, because that's what I'm comparing it to, because that's still kind of like the favorite one at this point. I mean, not so much. We're finding better ones, obviously. But SVOL is trading at basically where the TSLY started. TSLY is down about $5 or so. So obviously it's cheaper, but the simplified volatility ETF 2172 is basically where TSLY used to be. So with that, we'll just refresh here again. It's about an 18% dividend on 2172. But I would say this is still probably the safer one because we have more historical data, more statistics and stuff like that. And it just paid out, as a commenter pointed out, it just paid out, I think, like a week ago. It's same 32 cents a month dividend. So this is still, I think, a solid addition to any portfolio. But just to confirm again, we'll go back to dividends only here, and we will see, yeah, 32 cents. It hasn't refreshed for March, but I believe Thursday or Friday was our dividend payout day. So you'll probably have that in your accounts Monday if you check with your broker. But so the SVOL is still a really solid one, but this TSLY looks pretty awesome too, I have to say. So with that, let me see if I can go to the fund's website because I want to look into more information on this TSLY because I'm really intrigued by it. I think a lot of us are too. So let's see here. ETF.com. I'll share the screen as soon as I pick a good article here. And then we'll do some spreadsheet analysis on the fly, which is a fun way to go, right? Okay, so I found a good page here that I'm going to switch over to. Hopefully the internet connection's a little bit better today. So let me do this. Stop screen share. Then we're going to start it again on this new screen in just a second. New screen. Let's see. Okay, ETF. This is ETF.com. So the Yield Max Tesla Option Income Strategy ETF. Inception date, November 22nd, 22. Expense ratio, full percentage point, approximately. Assets under management, 15.96 million. So this is going to be a growing fund. I see a lot of money flowing into this fund over time. I would predict that by the end of this year, this could be at least 10 times the assets under management that it has right now. So let's see here. 1 month, we're down only 1%. 3 months, we're up 32%, which is awesome. I would have liked to get this January 3rd, right? Year to date, phenomenal net asset value compared to the actual performance. Here's some facts about the fund. TSLY aims to generate monthly income while providing exposure to the price returns of the Tesla stock, subject to a cap on potential investment gains. The fund utilizes a synthetic covered call strategy, which we were talking about in our Friday live stream, via a standardized exchange-traded and flex options, which consists of 3 elements: synthetic long exposure, covered call writing, and U.S. Treasuries. The synthetic long exposure seeks to replicate the price movements of TSLA or Tesla by purchasing and selling at-the-money call and put options that generally have 6-month to 1-year terms. To generate income, the fund writes call options with an expiration of 1 month or less and a strike price of approximately 5 to 15% above Tesla's current share price. Very interesting. I like this a lot. Kind of merges both, the covered calls, which I'm a huge fan of, and the dividends, which I'm also a huge fan of. So let's see, 5 to 15% above current share price for Tesla. This limits the fund's participation in potential gains if Tesla shares increase in value. Well, and I'm glad they clarify that, but if you understand options, that's a given, because if the stock price moves up too high and you're doing covered calls, you could get called out of that, and you could end up, either having to rebuy it, or you lose the stock. So your potential, the idea with a covered call is that your upside is capped, because if you buy, like, say, JP Morgan stock, if you have covered calls on JP Morgan stock at $120, which someone may have done on this live stream, and then the stock is currently at 132, you're way in the money. So if you get called out of that, you would lose the $12. Or you can wait and hope that the stock drops again back to like the 120 or lower, or hope that it expires. The way to get it to expire worthless is for the stock to be under the $120. So just say you have like a leap option expiring in June of next year on JP Morgan, that would be where you are at this point. Or you could roll the option out you could do that, but then you'll take like a more shorter term loss, but it won't impact your money in the account, because if you do it right, you can actually pick a better option. You like that, huh? Better option. There are better options. So you could pick a better option that has higher premium, and you could still make money back on the trade to offset your loss. But once you make that trade, you're going to show a capital loss for the first trade that you did, because you're rolling it out. So with that being said, yeah, I really like this one. So, and lastly, the fund holds cash and short-term treasury securities as collateral. And note, the fund does not invest directly in Tesla stocks. I don't know why they say stocks. There's just one Tesla stock. They should say shares of stock. Thus, investors are not entitled to any Tesla dividends. Yeah, I like how I appreciate their honesty here. I mean, they're really spelling things out that kind of should be a given, more or less. So, yeah, I mean that one looks really good. Just for fun here, let's look at Tesla stock, because I haven't talked about Tesla stock in a while. So we'll look at Tesla stock real quick, and then I will go into the spreadsheet analysis. So let's see, uh, TSLA. And I actually got a really dumb call option on Tesla, thinking I was thinking the market was gonna start to recover. I actually thought, like last year, last July or August, I thought by the midterms, I thought the market would start to recover, which it did a little bit, but not too much. But anyway, if we look a year ago, let's look a year ago here. Tesla was at 361, almost 362. 52-week range, the highest point is 384, lowest point is 101. So it definitely would have been a great time to buy at the bottom. But we never really do know the bottom. So again, start of the year was pretty much close to the bottom. So let's see. Yeah, 108, January 3rd. That was the time to be buying a lot of stuff. Yeah, because Tesla's gone up from that point. From It's 190 now. From the 112, it's gone up $78. So that's a 69% return. So there's another 69% return. You could either get that in the annualized dividend or by buying Tesla stock. So in this case, you don't need to do your own covered calls against Tesla. I mean, you can just buy the fund, which I'm really liking this fund. So now with that, let that ruminate for a bit, and then I will go into the spreadsheet here. And pull up the spreadsheet, and then we'll do some fun spreadsheet analysis here with our favorite example, the $1,000,000. Now, some of you have asked me to do 10,000. Some of you have asked me to do 100,000. But the reason I do 1,000,000 is because, like I say, it really illustrates how, if that's like your whole retirement savings, you've worked like 40 years or whatever. Oops, wrong tab. Uh, oh, I'm not sharing anyway. Yeah, it's just me talking. So those of you that have asked for that, I can certainly do that too. And you know what? I may just do both. But all you've got to really do is shave off a zero or a couple of zeros in this case, if you want the 10,000 or the 100,000. I just like to illustrate, when you're up to $1,000,000, how much you can make. You can basically replace your salary with these dividends. So with that, the spreadsheet is up here, and let me go into that. Share screen again, and then we will go here. All right. So we're adding TSLY to the family here. We'll go over SVOL again first, just to keep track here. And we've done a lot of them so far. So SVOL is here, and really the example hasn't changed, so I'm just going to keep it the same. Zoom into 200%. There's your limits for the United States viewers here, for your 401k or Roth IRA and your HSA at the top there. SVOL, again, $1,000,000 would get you 46,000 shares Dividends $3.84 per year, so it would pay you $176. And I'll add a column here. So I'll say growth of 10,000, since most funds do this. Growth of 10K, right? So if you were to start with $10,000 in the SVOL at the current 17.79% dividend, watch this one. So this is how you would grow. You would be at 11,790 in year 2, and then in year 3, you would be at 13,900. And this is going to be a good example of the rule of 72. If you just keep reinvesting in the dividends, assuming the fund stays relatively flat, which it does kind of seem to do, we may actually get some appreciation in the fund over the next year or so. But anyway, year 4, I'm going to show you till it doubles here. Year 5, and this is the same thing with 100,000 or a million, you're just adding zeros to it, right? So by year 5, you've almost doubled. By year 6 and 7, you've more than doubled. And you'll notice how the returns really start to snowball as you're compounding. That's the magic of compound interest. So within 7 years, you've more than doubled your money. And watch this, probably in another 2 years, actually only in another year. How about that? Because see, when you're getting a high rate of return like that, like 17 or 18%, and you snowball it, it just magnifies exponentially. So look at that. You've 3x'd your money within, let's see, year 1, 2, 3, 4, 5, 6. Within 7 years, you've 3x'd your money, which is phenomenal. So with that, now we're going to go all the way down here, and we're going to add a new one, TSLY. We're adding TSLY to the family. So welcome to the family, TSLY. Let's get you formatted just the same as the others. So we're going to do a million, but I'll do the same 10,000 example with compounding, because I know those of you that want to see that'll really be beneficial. So a million in the TSLY, and what did we say it was right now? 1617, right? So this divided by 1617, so it would get you 61,843 shares. Center these fields. And then let's see here. So the dividend right now, annualized, was 99.9 cents, 903, and then 902. Divide by 3 times 4. That's no, wait a second. 999. I know I did this earlier, but I'm doing it again. Plus 902. That's 3 months times 4, 1122. So it's basically $11.22, just round up, in dividends, which, now watch this one. Watch this one. This is going to be our best example. How about that? On $1 million. I don't know if this is sustainable or not, because this is going to be like in Zim territory, but $1 million in 1 year. How about a $693,000 and 878? So I'm sorry, 609. I can't even spit it out. $693,878.46. Who wins the Wheel of Fortune today? People watching this video, right? It's like spinning the wheel and almost landing on $1 million. So this dividend divided by the 1617 share price is 69%. 69% return, which is really phenomenal. Per month, I mean, geez, can you spend that in a month? Probably not. I mean, I would almost be good for 1 year at this. Like, if I could just get this for 1 year, I don't even need to do anything else. But of course, I'll still be doing other stuff because I'm resourceful, which is how we all should be. And I know a lot of this audience is resourceful too. That's why you take time out of your day to watch these videos, of course. So $57,823 in 1 month. That's what some of these are paying in a year. So I can get you a lot of stuff. And, you could even just, in this example, we're going to add another scenario. So only take what you need in payout. So we're just going to say less payout taken. So in this example, oh, and I forgot the end. So in this example, we're going to say only take like 10,000 a month. So we're just going to take 120,000 a year. and we're still going to be left over with 573,000. And then guess what we can do? We can just use this to buy even more TSLY and really supercharge our compounding, right? So with that, let me add another column now real quick. If the spreadsheet, okay, there we go. Come on. I don't want to scroll. Okay, so we've got a new column now where we're taking that. So we understand that scenario. And then now what we're going to do in column F, we're going to say growth of 10,000. So here we go. All right, growth of 10,000. So we're going to start in year one at $10,000 exactly. Let me center this here because this will be a really profound example here. So 10,000, and then watch this. This times 1.6939 to be exact. Look at that, 16,939. So by year two, you've more than doubled your money. You've almost 3x'd your money in 2 years. Pretty awesome, huh? Year four, come on, year four, you've almost 5x'd your money. Year five, you guys starting to see this snowballing? You're starting to believe in this compound interest thing? It's real. You've almost 8x'd your money at that point in 5 years. 6 years, it only gets better. So this is how those of you starting out with lower amounts of money, this is how you can really, if you find a fund like this, and hopefully it sustains, but you can really supercharge your returns. And I think, Tesla stock is really good for something like this because we've seen Tesla before it split. We've seen Tesla over $1,000 a share. I mean, Tesla is a very rapidly moving stock. And I got some good comments about driving Teslas, which I didn't get a chance to respond to yet, but I will. So now look at this. Okay, we're not even in year 10 yet. Look at this, year 1, 2, 3, 4, 5, 6, 7. In year 7, you 40x'd your money, which is like doing options trading without really doing it because they're doing it for you. In year 8, you're there. Watch this now. Year 9, how long does it take you to get to $1 million? Less than 10 years with this compounding. Why is that? And this may seem unrealistic, but when you have a very, very high rate of return like that, and it compounds, like just take the S&P 500, for example, okay? This one may seem more realistic to those of you doubters and cynics out there, which I would say don't be that way because you want to think positive, especially when it comes to money. The more positive you think, the more positive things you will attract to you. Law of attraction, right? I can get into that one day too. It works, I'll tell you. It does work. And you know what? For somebody, because some of the different mentalities out there, somebody may say, oh, if it works for you, why don't you have like a Lambo or whatever? Because I don't want one. I want to keep my Accord. I don't want to, I'm not a flaunter. But anyway, so with money, and I will tell you, speaking of thinking positive and all that, Standard and Poor is one of the worst names for an index ever come up with. And I have to say, we Americans, we're pretty good at naming things, especially political things, like Federal Reserve, complete misnomer, things like that. But Standard and Poor, like I would call it, if I had my own index, I would call it the UNR, unconventional and rich. So that's what I would say, because who wants to be Standard and Poor? You want to be unconventional and rich. Those are the acronyms or the letters I would prefer to use because I think that's one of the dumbest names for an index of all time. Okay, so what I wanted to say here, going off on this tangent here, because this is realistic. So if you had a 401k and you had $100,000 in your 401k, and I'm going to take the years 2019, 2020, and 2021. The S&P was averaging, not just the S&P, but like the large cap funds and the 401ks, we're averaging like 30% a year, okay? So I want to show the power of compounding with this just within 3 years. So, and for me, like I was saying, my 401k, I had it to where I did between 30 and 35% blended average between the funds I was in over the course of 3 years, which was the best 3-year period investing ever, at least for me. So, okay, 30% S&P, right? So you make 130,000, easy math, right? For the first year. Everybody can do the first year. But what we miss a lot of times, and this is the trick here with compound interest, right? So you're actually doing, when you're doing the rate of return, you're doing 1.3 because you're adding the 30% to the sum of 1, because 1 is the whole number that you don't lose, right? So then in Excel, it makes it very easy because you're just compounding it. It's 1 times 1.3. So look at that. In year 2, with the same 30%, you're at 169. In year 3, you've doubled your money in just 3 years. You see? So here's the deal. The difference between simple interest and compound interest, right? So if you were making simple interest, you're at 100,000, and then just simple interest. I mean, this is easy math. You're going to make the 30,000 in year 1, and then you're going to make, it'll be 160,000, right? In year 2, because 30%. Say you're withdrawing the money, you're not taking advantage of the compounding. Let's see the difference: simple interest versus compound interest. Compound interest garnered you another almost $30,000 over here. See? So that's the huge difference. It's like free money. So what I should say, our motto should be compound interest equals free money. In fact, you know what? I'm going to type that up here. Compound interest equals free money. And don't we all like free money? So to get free money, you don't have to wait on like a stimulus check or a government check. You can just invest properly. Isn't that awesome? Just invest properly. Well, save some money to begin with, which sometimes saving money is a challenge, which I understand. But how about that? Compound interest equals free money. Remember that. I'm going to even italicize it. And I would make it bigger, but that's as big as we can go in the spreadsheet here. So thanks, Google. Okay, so in 4 years with the S&P 500, 30,000, look at that. You got an extra 9,000 in compound interest of free money. And then in year 3, you got an extra, what did we say? 30, or is it 29,000? So 219,700 minus 190,000. Wait a second. 219, 700 minus 190,000. Yeah, 30,000, 29,700, right? So that's how that works. But with your $10,000 here, okay, and I was kind of onto a profound thought here. So look at this: year 1, year 2, year 3, year 4, 5, 6, 7, 8, 9. So in less than 10 years, there's your $1 million. If this example worked, which this 69% dividend payout would have to continue. Highly doubtful that it will continue, but that's how this would work if this same payout happened. Now, I would imagine if the same payout happened, you're going to be hearing about this a lot. But maybe not, because right now there's funds paying between 17 and 20%, and there's still people out there that would rather do CDs than invest in these funds. And there's one, for those of you that doubt, well, how sustainable is this? SVOL is only like 3 years old. Well, hello, there's one, the golf fund, that's been paying a solid dividend for the last 15 years, including through the Great Recession. So there are funds out there like this, and you don't hear about them all the time. That's the thing. You have to kind of go and find them. But I can assure you, there are people quietly doing this. And the more people that do this, the better. I see we have 2 live viewers. So anybody that wants to comment or share anything with the audience here, comment. I'll put your comments up. I'll read them. But otherwise, like I say, I should call this video basically in less than 10 years, like 100x your money in less than 10 years with this example, this TSLY. So, and I have the title of it over here, TSLY amount, $1 million. That's our first example. Imagine with $1 million. Think about that. But the wheels start to turn. So think about this. We'll do this example real quick here. So $1 million, and then 1.6939%. Look at that. There's your 600,000 in year 2. I'm going to go ahead and do the compounding since we're having so much fun here. So year 3, watch that. Oh, wait a second. What happened here? Why is this not carrying forward? There we go. Almost 3 million. So it's going to be the same thing. You're just adding a couple of zeros to it. But look at this, though. With $1 million, you're at 40 million in a very short period of time. 1, 2, 3, 4, 5, 6, 7, 8. And when you've got that kind of money, I mean, you're probably set. You probably don't even need to watch an investment video ever again in your life. You just need to manage it, because if you get that kind of money and you blow that amount of money, I don't know what to tell you at that point. But if you can get that, I mean, that's an extreme, like the best blessing you can get in life, you know. So I wouldn't squander that. But that's how something like that can be done. With all of that being said, that was today's video. Thank you all for tuning in. For those of you who tuned in live, for the majority of you who will watch after it's posted, I hope you enjoy it. Please remember to like, comment, and subscribe. Thanks so much for tuning in. Have a great day.